Hey guys, I'm Remy from Remy's Real Estate, and this is Gee Vas from Pivotal Financial. We're just here in the office.
Nice office, Remy.
Thank you. There's a lot of things happening in the world of real estate at the moment, and it was very important for me to invite Gee to sort of explain to us her opinion and her view on, the back of the scene. I met Gee almost a year ago now, I think, through a common client. And we've grown to know each other quite well now, sharing a bit of the same vibe. Yeah, we drink a lot of wine.
We drink a lot of wine, yeah. And margaritas.
And margaritas, yeah, it's my favorite cocktail. But we're here for serious stuff today, and to hopefully give you guys something to think about for your next move in real estate, whether you're renting, selling, buying, whatever. So, you ready to get into it?
Let's go.
When COVID hit, the whole media went on about the market is going to drop 30, 50%. It was the end of the world, and people were starting, oh my God, I'm going to get a bargain very soon. And obviously that didn't happen. People that did not buy at that time have missed out on hundreds of thousands of dollars. They could have made a lot of money on their property. What do you think created that perfect storm in terms of borrowing capacity or cash in the bank or interest rate? What made literally the perfect storm for the market to go crazy here?
I think you hit the nail on the head there, Remy, by actually talking about the pandemic. So when the pandemic hit in 2020, no one could actually foresee what was going to happen in real estate, with lending, with banks. But what the RBA did do was that they saw that Australia, the world, was in a pandemic. So they reduced the cash rate. It was the lowest cash rate that we've had ever, I think, in Australia's history. Wow. And it was a combination of the fact that it was a pandemic and they wanted to stimulate the economy while the world was locked in.
Yep.
So that's one thing that happened. And that's what we saw in the last couple of years, the fact that they decided that the only way to stimulate the economy is to have cheap money. And that's what we saw, the lowest interest rates. So when you see low interest rates, people go shopping. Yeah. They go and buy houses, they buy boats, they buy caravans, they buy cars. And that's what happened over the last 2 years.
Everyone bought a toy.
Correct. No. Everyone bought a toy. Yeah. And now they got to pay that toy back. But it's not a bad thing. It's not a bad thing at all.
If the banks don't make money, the economy is not running well. So everyone needs to make money at the end of the day, I guess.
Absolutely.
Yeah, so it was cheap money. Everyone borrowed. Also, we could not go overseas.
Correct.
So people had probably a lot more cash in the bank.
Absolutely.
And then slowly the unemployment rate went, down.
Correct.
And people had jobs and whatnot.
Yeah,
so,
absolutely. And I think also with the more time people spent at home, they were borrowing money to renovate. They were looking at the fact that they wanted to buy a new house. Yep. And so it just created this hysteria. And we won't talk about the media too much because that's their job, to create stories and to make people scared. Yeah. But we're still in a really, really positive situation.
Yeah, absolutely, yeah. When did things start changing? When did you first hear that there's going to be a change in interest rate and not a small one, like quite a big one? When did you feel like, okay, it's gone crazy, but I've just heard something that's going to change everything?
So we sort of around January this year, we had a feeling that the RBA was going to make their first move. And the reason they do that, again, Remy, is that they need to balance things out, right? So for a couple of years through COVID, through the pandemic, they had reduced their rates. Now they were like, well, we need to bring the Australian housing market and also sort out inflation. So around January, we heard they were increasing their rates. In May this year was the first time they increased their rates by 25 basis points. For people who are watching, that equates to 0.25%. And then so May and June, it was 0.25 and then a 0.5% increase.
Yeah.
And we probably will see more increases in the future. But in saying that, we're still at 2.5 to 3% for variable interest rates. Even if rates go up to 4%, still very cheap money if you look back at the last 10, 15, 20 years of rates in Australia.
Yeah, of course. Do you think, that's a magic question, probably not even know if you can answer that. Do you think we'll ever go back to a level of, what people a generation ago lived? I wasn't here, but at 18%.
I really don't think so. I just can't imagine it can go from 2% down to 18%. I think what we might see is, 4% interest rate, 4.5, and then I genuinely think it will balance out.
Yeah.
Yeah, absolutely.
Okay. At the moment, I'm hearing a lot of buyers, they're like, oh, I'm going to wait. I think it's going to drop, blah, blah, blah. And I've heard that when COVID hit and the media was literally saying it's going to be, the biggest housing slowdown ever, recession, and it didn't happen. It went the opposite way. What would you say to all these buyers who are literally hoping that prices will drop? What are you saying to them? Because last time that happened, it didn't happen.
It went the other way around.
It went the other way.
The only thing I'll say to buyers is I genuinely believe this is the best time to buy. And I'm saying that because if you were competing in the market last year, the year before that, you are competing against 50 people at open homes. You're going to auctions where you thought maybe your budget was 700,000 and houses were selling for 1.2 mil. So for me, this is the best time to buy because prices have leveled out.
Yeah.
So if you're going to an auction, if a client's coming to see you, they've at least got a good idea as to where they are. They can get borrowing to what they need. So this is the best time to buy. The market has balanced out. Will prices drop? I don't think so. I think Brisbane has now got to a point as to where the other bigger states were.
Yeah.
And I think it will just stay the same. If not, if it has a rise, it'll be a small increment.
Yeah.
But absolutely, there's no better time to buy in my eyes.
Yeah, absolutely. And it's funny, I think Brisbane is very isolated compared to Sydney and Melbourne. We have Queen's Wharf, we've got the Olympics.
Correct.
We're going to need a lot of people to work here and a lot of money is going to be poured here and it's going to be outstanding.
Yeah.
And then, at the end of the day, renting versus buying, right? It's always, do I keep renting or do I keep buying? Well, you might as well put the money into a mortgage, right? And if you're renting, your rent's going to go up. If you haven't had a rent increase, there's very likely you're going to go up, 50, I've seen $200 a week increase in many properties. So what's your advice on the long term? Obviously, I know what it's going to be, but.
Yeah, I think, look, there's pros and cons, and depends on why you want to rent versus why you want to buy. The government is coming out with a lot of deposit schemes to help first home buyers.
Yep.
So years ago, you needed to have a 20% deposit. Now you only need a 5% deposit. So you don't have to be saving for years and years to be able to achieve home ownership. In terms of buying versus renting, when we actually give someone their borrowing capacity, so when we assess them for a loan, if the interest rate at the moment is 2.5%, we're looking at, can you afford it at 5.5%?
Yeah,
right. So we're not just giving them a loan and hoping for the best.
Safety net.
Yeah, absolutely. And we educate them to say, can you still afford it at this point, that point, or that point? So I worked with the client this morning, a referral from you.
Oh, cool.
Thank you very much for that. And we ran through what her renting would be like versus what her buying would be like. And it was exactly the same. There was no difference in renting and buying. In fact, I think it might have cost her $10 or $15 more if she purchased, and she was like, let's do it. I can't
For
wait.
10 or 15 bucks.
Yeah, you own your
Free
own
coffees.
property.
Yeah.
Yeah.
That's insane.
Yep, absolutely.
Okay, 0.5% increase. You put that up on your story not long ago, and that will be my last question to you today. Sure. We can have one after this.
Yeah.
What does that represent on a 500,000 mortgage, on $1 million, or plus? Like, what does that equates into an increase?
Okay, so what we might do is, so say for example, if someone's got a $500,000 loan,
Yep.
if the interest rates at the moment are 2%, if the rates go to 4%, that doesn't mean your loan amount doubles.
Yes.
Right? A lot of people think that
Yeah, no.
I'm paying $1,500 a month. Oh no, it'll be $3,000.
No.
It goes up proportionally depending on the loan. So a $500,000 loan from memory could be $60 a month.
So $60 a month, right? So I think obviously most people could easily afford that bit of increase.
Absolutely. And the thing is, the point of interest rate rises are to just make people a bit more conscious about their spending. So in the last couple of years, we probably could spend whatever we liked. So now it's just more about jet skis, absolutely. And now it's just more about being conscious again.
Yeah, absolutely. And, we're going to go back to traveling and stuff. So
Yeah, correct. And and one last thing that I'll say on that, Remy, is that we've been in a pandemic, but we've been able to save a lot over those 2 years because we haven't had costs as traveling.
Yep.
We've been sort of locked down, right?
Yep.
So people have probably been in a position where financially they've gotten themselves in a better position.
Yep.
So, don't be scared to buy. There's never a better time. And I can't wait to buy another property, Remy.
I'm sure you can't.
Absolutely. So hopefully that's
awesome.
answered a few of your questions.
Yeah. Oh, look, I hope everyone got something out of it. I certainly did. And, even though I think the same, it's good to hear it from a professional that sees people coming from, people coming from home loan every day to you.
Yeah,
and hearing their story and hearing what they've got in the bank, what their goals are. I agree with you. I've seen hundreds of buyers when COVID hit telling me I'm going to hold off, I'm going to wait until it drops. And now they still haven't bought. It's a year and a half later and they missed out on $250,000 or more.
Oh, absolutely.
And personally, I think there's going to be more of a change in a high-end market, 1.5 plus, than under that, 0 to 1.5, because those increases so small, really.
Yeah.
So, $60, $200 a month, it's feasible, right?
Correct.
I think that market, especially in the capital city, is going to be really, really good, very, very hot still, and there's a lot of demand here. So thank you so much for your time.
You're welcome.
It's wine time.
Yeah, I think so. But let's shoot some hoops first.
Absolutely, let's do that. Thank you guys. Hope you got something out of it. Any question, I'll put Gee's details obviously on my post. And any questions for me, give us a call. Thank you very much.
Thanks.